So the Fed lowered the Fed funds rate by 0.5% last week. Why in the heck did mortgage rates not go down by 0.5%? Hey, it's Craig back with another Mortgage Minute, and just want to talk to you about kind of where the market is now that the Fed has made their rate decision to lower interest rates by 0.5%. But I have to make a huge disclaimer, all right, and we need to have an agreement that I'm happy to explain what's going on, but I want you to hear something. Mortgage rates are in a really good place right now. So if you've not looked at payment options recently, if you considered buying a home, if you considered refinancing, you need to take another look at where mortgage rates are because they're in a really good spot. With that said, since the Fed lowered the Fed funds rate by 0.5% last week, you've really kind of seen a muted response with mortgage rates. And so the million dollar question is, well, why is that? Like, why haven't you seen more of a reaction? Well, there's actually a pretty simple answer why that is. Okay, and here's why that is. Bond traders, which trade mortgage-backed securities day in, day out, all throughout the day, they are seeing economic reports in real time. Okay, what that means is they're seeing the jobs report when it comes out. They're responding to economic conditions as they are actually happening. The Fed only meets 8 times per year. Okay, so short of the Fed calling an emergency meeting, the Fed is only going to make a rate decision 8 times a year. Now, why does that matter? Well, here's why. When the Fed is meeting 8 times a year, they're having to basically make a decision. And a lot of times it's a decision based on economic reports that were released 2 and 3 weeks prior to them getting together. Okay. So here's what that means. Mortgage rates were improving all the way up to the Fed's rate decision. So when the Fed made their rate decision, they were basically catching up with where the market had already been and been going the previous 3 weeks. So the Fed lowering the Fed funds rate did not signal to the market that, oh my gosh, it seems like the economy might be slowing down a little bit. The market already knew that. Bond traders already knew that. They were already trading on that same information. Had the Fed been meeting 3 weeks prior, they probably would have made the exact same rate decision. There's no guarantees of this, but probably would have made the exact same rate decision 3 weeks ago. As a matter of fact, a lot of times, or a lot of people have said a 0.5 point cut, man, that's a major cut. That really indicates that the Fed, is shaken up about the economy. And I look at that and say, not really. The Fed probably should have cut the last time they met before last week 0.25%. Okay, so really, them cutting 0.5% on the Fed funds rate to a certain extent, that's playing a little bit of catch up. Not that they're really behind the 8 ball. It's just playing a little bit of catch up from, yeah, they probably could have cut a quarter at the last meeting. Had they cut a quarter at the last meeting, most likely at this meeting that they had last week, they probably would have only cut 0.25%. As it is, they didn't cut in the meeting before. So this very last meeting that they had, they cut 0.5%. Like I said, really kind of catching up. But mortgage rates were already playing into that, had been playing into that past 4 weeks. So what does that mean for you? Here's what that means for you. If you're thinking about buying a home, now is an excellent time to look at that. If you're thinking about refinancing, let's take a look at it now. Okay. If the market hasn't improved enough to make a difference in either scenario, whether you're buying a house or looking to refinance, we can figure out what your target rate needs to be. And if rates come down to that point, we can let you know. So there's no reason not to take a look at this. So here's what I ask. If you want to take a look at it, give me a call, 615-498-5626, and I appreciate you watching.